So let's roll over to York here and the Freehold and take a look at what we're seeing for the month of June. Not much movement in median price. We're up that 0.2%. We were hovering at right 1299 back in May, 1.301 so far for June. The transaction volume again down, like not it's not too uncommon to see sales slow from May to June. That really isn't that abnormal. We see that on a lot of the year over year charts. But because we're so backlogged in sales, it is disappointing to see that continued to drop. We would have liked to see even marginal growth there, especially if we're going to turn this thing around for where we're going to end up at the end of the year. But we did see a slowing there in new listings. You know, we're down 12% for our new listings. Median days on market just up slightly. Terminations about where you'd expect. This is not a high number in comparison to what we were seeing earlier in the year. Still 7.9% in comparison to, we're up year over year 41%. See, that's the thing, right? When we're comparing to what else we saw in 2025, not a bad month. But when you compare it to what we're used to see, it's up considerably. And again, year to date change from last year versus this year, 47% of those or increase in terms of termination volume. So those terminations are coming because people are not getting their pricing quite right. So they're out there, they cancel a listing, bring it back on at a better price, or potentially cancel a listing and don't come back to the market at all, which we start to see a little bit more of as our new listing volume drops. But I want to roll into the visuals so you guys can see that. New listings, here's the thing, Matt. We're right in the pack. We're right where we should be over the last 15 years in terms of what we would expect to see. And you do see a lot of that rollover in terms of new listings from May to June. Totally normal. What we're seeing here in terms of active listings is we've now crossed the highest we've been, by 4 units. I don't know, a little bit more than that.
Yeah, we missed it by 4.
Yeah, 4 units for 2018. Yeah. Squeak in some more listings. It was 4 new listings so we can get that record high. I think what's going to happen, Matt, is this is going to cross over 2018 by the time we get into July for active listings. I don't think there's any way around that. But yeah, going back 15 years, the most active freehold listings we've seen in York Region, that's the takeaway from this graph for sure. Sales volume, again, the slowest we've seen in those 15 years. I think that when we looked at that halfway chart at the very beginning of our episode today, it's looking like we're going to be back to that 2023 low of annual sales volume. And when I look at 2023 on here, where's my dark blue? At 925, had a little uptick there, and now it came down and it really dropped off. The fall of 2023 was absolutely brutal. So hopefully we don't keep this trend line. Maybe there's hope for us to overcome 2023 if we can stay above that, but I don't know. I don't know if that'll hold true. And our median price here, let's see how we're doing for York freeholds. Did we in fact drop below 20? We have not dropped below the 2021 pricing yet. So York freeholds still holding strong, but that's not gonna stay for long because 2021. Look at that uptick, this rocket ship of a launch that we had in median price through the second half of the year. Quite tremendous, and obviously that's not the trajectory that we're on.
Yeah, it's inevitable that we'll drop below that price this year.
Hovering around just under 6 months worth of inventory, 5.68 months worth of inventory. So again, because it's the first part of the segment in our show where we talk months of inventory, when we're looking at that number, we're saying how long would it take to sell all the homes currently on the market at our current absorption rate, the amount of sales that are happening every month, without any new listings coming on. So with no new listings coming on, it would take over 5.5 months to sell everything that we have out there currently. And again, we are above that 2018, 2019 numbers. And Matt, you know what I love about this chart is it is a good reminder of how slow even 2019 was coming into 2020. Because 2019 was still a slow year. These are the lag effects of when the change first happens in 2017. And then it carries over, right? And that's kind of what we're dealing with still. But 2022 was when we started to see the rates. And this is pretty much bang on. Right around March was when the hike started to happen. And that's when our inventory ticked right up. Yeah. So still balanced, leaning more towards sellers. Taking a look at the amount of homes that are selling over the asking price, this is starting to trail off. And it is interesting because at the start of the year, it had upticked quite a bit. 37% of the homes were selling over the asking price. We have now since dropped down to 26%. And there are certain homes that will always command that demand, whether it be in a great neighborhood, on a great street, that perfect layout, whatever it may be. There are those homes that will still sell. So at the beginning of the year, what we thought was perhaps this is higher because the amount of sales volume was so low. So if
Yeah.
say there's 5% of the homes out there are always going to command competition, but now our sales volumes drops off so much that 5% looks like a greater share of the market than it would actually be. But we're still selling the same amount of homes, so maybe that theory is flawed because we are dropping back down to 26%. Who knows? Who knows? Matt, why don't you take us away in terms of where we're seeing a lot of this growth happening? Not only now our sales pockets, our ranges there, but also our active listings.
Yeah, I think the biggest takeaway from this chart is going to be the active listings over 2 million.
Yeah.
You've got over 1,063 active freehold listings with only 75 selling. So there's a large buildup of ultimately overpriced properties in that range that people just aren't willing to pay for at this time. We can see that the active listings where we're getting the majority of the sales is between a million and 1.5 million.
Yeah.
And we don't even have as many active listings in there, not even close, off by about 250. But and it's stuck out to us for as long as we've really been doing this show. The high end market is just piled up and piled up and piled up, and we're not seeing anything close to enough sales to kind of absorb all those homes that are on there until they keep pricing themselves a little bit lower and getting down to where buyers are comfortable with the price.
Yeah. And we've seen that transition start to happen as people have been terminating and bringing homes back on the market, lowering prices. We've seen some of this trickle down, but it's still such a huge category in terms of what's available. Like the biggest price category in terms of what's out there. And again, we're talking freehold homes in York region right now. $1 million to 1.5 is really the sweet spot for the most amount of choice and the most amount of where buyers are seeing value in terms of making those purchases. Um, it's
That's
not really the
14.
lower end, and it's because it's a freehold, right?
Yeah.
There's not too much stuff out there these days under a mill. But I will say there is a lot of townhomes that you can pick up for under a mill now in certain areas, even Aurora, where there's great buys, under the million mark. Whereas before, in say the peaks, some of those were going for 1.4 just for the townhomes. So it's the value's there, right? You're getting that built-in spot, but
Yeah. Yeah.
it's hard. Sometimes hard for people to see.
There's 14 months inventory for the 2 million plus,
Yeah, yeah,
which is it's high.
staggering.